So this session is about a concept. The first part of the session is about this concept turning into an opportunity. An opportunity at the country level or at the regional level to reduce some costs and to harmonize operational flows. And then the second part of the session is about this concept turning into an actual reality. So this is an engine. We'll put this engine in a three-dimensional shape, in a cube. It has 3 faces that we can see, and 3 of them on the dark side of the cube. The idea is that each one of these faces represents an individual channel to access the characteristics of that engine inside the cube. And to translate that engine is a software solution, is an IT system, more specifically, a CSD application. And the faces of the cube are CSD institutions. So we may have a commercial CSD, we may have a government CSD, maybe even a commodity CSD, all of them using the services of the same centralized IT solution. Now, having a single centralized IT solution creates a very good environment for harmonizing operational flows. Operational flows such as, for example, onboarding of stakeholders. You can have a stakeholder, which may be an institutional investor or a retail investor, which is onboarded on the CSD onboarded on the application actually by one of the CSDs. And then that particular investor can be shared with the other CSDs in the integrated group. As a general concept, each CSD institution from the integrated group will maintain its own independence in administrating and configuring the entities which are relevant for its area activity. So the government CSD could onboard stakeholders, and then they can be shared and accepted by the other CSDs in the integrated group. Other entities could be financial instruments. You could have a corporate bond being issued in the commercial CSD, and then that particular bond may become interesting for the government CSD, and then it's simply shared and used by the government CSD as well. The concept of an issuer CSD and investor CSD, it's still there, but for the CSDs in the integrated group, it becomes quite transparent. The other way around applies as well, with a government bond being used in the commercial CSD. Now, there's also the concept of securities accounts. Once an investor is onboarded, then it could open securities accounts in either one of the CSDs. So, as you can see in the schema, the same stakeholders could have securities accounts which are owned by each one of the CSDs in the integrated group. Now, I mentioned that each CSD institution maintains its own independence of configuring and administrating the entities that are relevant for its own activity. In other words, they can manage their own users, they can manage their own timetable events, and very importantly, they can manage the collateral eligibility. Because one of the opportunities that this concept provides is to be able to efficiently mobilize collateral to support settlement and liquidity management. So typically, lenders are central banks, but from a technical perspective, there is no restriction in having different lending institutions in the different CSD from the integrated group. And each one of these lenders has the possibility to configure the criteria based on which we'll accept collateral for the loans. When we talk about loans, we can talk about securities lending and borrowing. And you can see that the different securities accounts in the different CSDs may be flagged as eligible to be part of the collateral pool. So that collateral pool spans over all the CSDs in the integrated group. So whenever there is a need to enable it, then such an application, such an engine would be able to look in securities accounts across multiple CSDs. Another loan, it's the auto-collateralization, the situation where, for example, an investor in the commercial CSD wants to purchase a financial instrument. Turns out he doesn't have the money, but they may have eligible collateral in their accounts in either one of the CSDs, and then the system could use that collateral for auto-collateralization on stock and get a loan from one of the lenders which are enabled in the group of integrated CSDs. Now, in terms of interfacing, it's the opportunity to harmonize cash settlement, not necessarily from a model perspective, because each CSD can maintain its own model and settlement cycle, but from a technical perspective and being able to consistently link into the cash settlement system. The same with trades. All those financial instruments that are managed by the different CSDs, they may be traded on an exchange, and then that exchange could provide information about already matched trades in a consistent way to the single centralized application, and then it's directed to one of the CSDs for settlement. The same for international CSDs. I've already mentioned that for the CSDs in the integrated group, the concept of external CSD becomes transparent, but still those CSDs at a country or regional level may have to interact with ICSDs, and they can do that in a consistent way. And if for some reason the centralized engine does not have an auctioning platform, then they can interface consistently with external auction modules. A very important benefit is for announcing, distributing, and confirming cash and securities entitlements that are resulting from corporate actions. This harmonized way, it's not necessarily for institutional investors, those that can process standard messages. It's more for the retail segment, the ones that are not relying on standard channels, more like relying on a mobile application or emails or SMS. I mentioned at the beginning opportunity to reduce cost. Well, a centralized software solution obviously translates into a single technical environment, therefore a single instance of the required hardware and third-party software. So as the number of CSDs in the integrated group increases, the cost proportionally decreases. That, of course, unless the group decides to host such an application in the cloud. In that case, the cost decreases even more. Another opportunity is to have I realize that you may not be able to see that, an opportunity to have a consistent data access mechanism. In other words, a single centralized software solution has a unified graphical user interface, has standard APIs that allow the stakeholders to get a consolidated view of their holdings and their activities across the group of integrated CSDs. And a CSD solution would sit in a secure environment. That's why it will connect through a secure connection and get the consolidated view. On the other hand, for retail investors, that could be an additional application, a portal application that allows them to connect into the CSD system and get a consolidated view of their portfolio and of their activity. Additionally, this portal application, which is accessible via mobile application, gives them the opportunity not only to pull information, but also to push information. For example, instructing a transaction or expressing an option on a corporate action or placing a vote on a general meeting. In conclusion, if at the country level or at the regional level, there are two or multiple CSDs that identify a benefit in having a centralized single software solution, and they are committed to actively work together to overcome any possible regulatory or legal challenges, then the technology is certainly already there to support that, without introducing limitation, actually providing the level of flexibility that allows the definition of a perfect balance between benefits of integration and independence necessities, which in reality, every CSD institution will need to maintain. So I mentioned that technology is already there, traditional technology, distributed technology in general. Montran Corporation, in particular, is there to support this concept with its global presence. 44 years acting as a technology company in the financial space, and in the last 20 years servicing 39 CSDs around the world. Okay, so this concept has become a reality. That's in the capital markets environment of Georgia. And here to present it is Mr. Giorgi Laliashvili, who's the head of financial markets for the National Bank of Georgia. At the end of his presentation, we have time to take some questions. Giorgi?
Thank you, Raresh, and good afternoon, everyone. So my talk will be about the practical application of what Raresh has presented in a stylized view. And it will be a story about how the technology, how the system can facilitate integration and can avoid the fragmentation of the market. So in Georgia, we are coming from a small, fast-growing economy and developing financial markets. And usually smaller markets rarely generate sufficient revenues to finance significant investments to capital market infrastructures. In countries where there are two CSDs exist, typically one is at the central bank for government and central bank securities, and the other one in the private sector, often related to the stock exchange. We frequently come across the situation when the central bank can create and maintain relatively good market infrastructure, but the commercial CSD would lag behind in its development. So this has been precisely the case in Georgia a few years ago, where MBG has been running fully automated systems since 2010, and the commercial CSD, on the other hand, has been underinvested and would have obsolete systems with little or no automation, high risks, and high fees because of the high costs. As a result, the market was fragmented and it was underdeveloped. So one possible solution that many countries have adopted is unification of the CSDs. So the unification brings economies of scales and allows for cost savings. Some more profitable segments, for example, government securities, are moved to a consolidated CSD, and this typically generates a healthy and stable revenue stream. However, the public sector does not usually want to entirely give away the control over this very important market infrastructure. So frequently, we see that the single CSD has a central bank ownership, sometimes a majority stake. But this setup has a downside because the central bank gets involved in some risky business of equity market and the corporate bonds, and this may eventually negatively affect its ability to pursue like the core mandates of price and financial stability. So In this setup also, private CSD loses a big share of its independence. So consolidation may not always be desired or even optimal. Moreover, if the consensus between the CSD stakeholders, between the public and private sector is not reached, so these two CSDs may continue functioning in parallel for many years, and the market will remain fragmented. And the private security segment especially will lag in its development. We've seen that across many, many countries. So this debate of whether single or multiple CSDs is a better solution is more likely to continue going forward. And I shall admit that there is probably no single solution that fits all the situations. But in Georgia, we think that we have found an interesting solution to a common dilemma. We decided to consolidate the infrastructure into one IT platform, but we kept two central securities depositories as independent legal entities. So now there is a clear division on what these CSDs can do. The central bank is in charge of the government and central bank securities, and the commercial CSD is charged on servicing of corporate bonds and equities. So being independent means that these CSDs can pursue their own business objectives, and the system will allow for full autonomy and the virtual segregation. But simultaneously, the entire capital market will enjoy the convenience of centralized place for safekeeping and settlement, and the private CSD can benefit from lower implementation and maintenance costs. So this innovative solution that's now in place in Georgia was designed and implemented together with Montran, and it required a very close cooperation between public and private sectors. So while the outcome is simple and straightforward, arriving to this setup, it was not an easy way. At early stages, we were frequently questioned whether this is a good idea or a good solution. So we would be typically asked, why do we do something that's not working anywhere else? And that's why we were looking for the analogies around the globe. And back then, we were lucky to find some similarities that we had in our setup with a system that all of you know very well. So it's T2S, Target 2 Securities, at the ECB. So it's essentially similar concept, not identical, but it's a settlement system that's run and operated by a central bank, and there are many CSDs, national CSDs connected to it. And we had very productive cooperation, by the way, with the ECB team who worked on the T2S project on the design phase as well. And on their side, they were also happy to hear that there was another country, another market that was considering similar setup. And so it was an interesting discovery that they told us they were getting the same questions and the criticism at the early stages of the design of the T2S as we were getting in our case. But we have eventually overcome all the difficulties, and we were able to implement the system the way it is. So I think I forgot to start the slides, and sorry about that. But okay, we're here. Sorry. So we call it GSSS. It's Georgian Securities Settlement System, and it covers entire securities market in Georgia. So it has two CSDs connected to it, but it's scalable and it can accommodate more if needed. So it is integrated with the trading infrastructure, which in case of Georgia, it's the OTC platform is a Bloomberg, and the exchange platform is also provided by Montran. So it allows for fast and seamless settlement for all the trades that's done on these trading platforms. And if we take a case of the OTC trades, if it's a T+0 settlement if needed, so the entire time from completing trade to the final settlement in the depository and the RTGS, it takes just a few minutes. So all the settlements that involve cash and securities are delivery versus payment in the central bank money. So the system is installed and operated by the central bank, but the legal ownership and the license on the system, it's shared. So it's co-owned by the private depository, which is very important. So here I'll talk a little bit why we think that the central bank is well positioned to operate such system. So we all know that traditionally the central banks have been running the cash settlement systems, the RTGS, but they are equally well positioned to operate the securities settlement systems. Because the securities settlement naturally needs the cash leg, if these two legs are located in the same place, which is an integrated model of settlement, so this brings a lot of useful advantages, which Rajesh has mentioned, and I'll talk in details in a moment. So we all know that the central banks, they are strong financially. They naturally cannot go bankrupt because they print money. And they can afford investing in costly IT infrastructures without being pressured for fast cost recovery. And they have all the business continuity arrangements and the infrastructures in place, which otherwise is costly for the private sector to sustain in a small market. So as I already mentioned, the central banks have been running critical systems like domestic payments or international reserves management systems. And the marginal cost of operating one more important system like GSSS is much lower for the central bank compared to the private CSD if it operated similar infrastructure independently. Because the security settlement systems and CSDs, they store and move around important assets for the banking sector. So they are there to allow governments to finance their budget flows. They are important component for central bank monetary operations because of the collateral that's stored there. So they are what we call systemically important systems, which public sector cannot neglect and fully leave to the private sector discretion. Therefore, the central bank has vested interest in these types of systems, in our opinion, and at MBG we are supporting and have been supporting its uninterrupted operation by all the means at our disposal. So importantly for us as a central bank, that the GSSS supports large array of central bank monetary operations. So the lending process is fully automated, be it like intraday liquidity facilities, like overnight standing facilities of main refinancing lending operations of the central bank. So these transactions, they either originate within the, either of the two systems, the CSD or the RTGS, or they can come from external systems like Bloomberg. But all lending operations are always and without exception against collateral, so therefore the role of the CSD is critical. And the system provides full package of collateral management tools for the central bank, which are important to be mentioned separately. Okay. So the way it works, the collateral policy of the central bank that includes collateral eligibility criteria, haircuts, valuations, some credit ratings, concentration rules. So all of that is set up in the system in advance as a static data. So taking this into consideration, the collateral policy, system automatically selects and pledges collateral from the portfolio available at the participant or the borrowing bank account and pledges those securities automatically in favor of a central bank. So basically, when a commercial bank borrows from a central bank, it does not need to do anything other than initiate the loan, and depending on the type of instruments, it can be bilateral or auction-based, but then the system manages the collateral afterwards automatically. So now, if the bank does not like the selection that was done by the system, so immediately after this pledge is complete, the bank can substitute the collateral at their own discretion. And there's no central bank approval needed for that, because again, the system makes sure that every moment in time, the central bank lending operations are fully collateralized given the collateral policies. So similarly, there are some built-in tools that allow for efficient use of collateral with the central bank. So as an example, the system allows for new loan to be used for the repayment of the old one using the same collateral. It's kind of collateral rollover. So this significantly reduces the need for both cash and the securities, and so it improves the efficiency. Talking of the efficiency, the GSS as it was built with the settlement efficiency and convenience for liquidity management in mind. So the integrated model of settlements allows for automation of corporate actions, so that, as an example, a coupon payment to the bondholder is made out by the system automatically directly to the beneficiary's account, so provided that that beneficiary is set up in the system. And that's all without manual intervention. So there are multiple intraday facilities available for faster settlement of cash and securities. And that includes the auto-collateralization, something that Raresh has mentioned, and that's a very convenient tool as well. So the default settlement model in the system is DVP1. However, for those transactions that cannot settle on the gross basis, so there is a netting mechanism that runs every few seconds, and based on the quite efficient gridlock resolution mechanism, so it makes sure that the securities settle on a net basis. So that the same approach is used for the trades that originate from the stock exchange, and that would be net settlement. Sorry, the back button doesn't work. Okay. So, in a way, but it does not go back. Okay. Now it works. Great. So, as a result, we have like two settlement model in the system that operates in a hybrid mode. So, while all of these may sound fancy, there is a very practical implication for the commercial CSD, which is very important. And in case of Georgia, the new system has brought us a lot of improvements. So we moved from the fragmented infrastructure to a centralized one. So we have been able to reduce the operational cost. We were able to reduce the transaction fees. And last but not least, the commercial CSD were able to generate a better revenue stream over the years, which we have here on this slide. And finally, looking back at the 5 years in operations, we think that our major expectations about the system have mostly materialized. So while this is not an orthodox solution, we were very lucky to have Montran as a partner who have shared our vision and helped to make it a reality. So today, this product is part of Montran's standard offering globally, and the system has been awarded with prestigious award from Central Banking Awards in 2020, and the reform has featured in a number of studies, and most notably the IMF World Bank joint publication on the guidance note on developing local currency bond markets, and earlier in the IMF paper on the topic on how to organize central securities depositories in developing countries. This makes us very proud of course. A number of countries since then have expressed their interest and are considering adopting similar approach like in Georgia. And we certainly look forward to see if our experience is going to help other countries in better organizing the post-trade infrastructure. Thank you.
Thank you very much, Giorgi and Arash. It's very interesting to see that in Georgia you get your own T2S. And now the space for audience, if you have any questions.
Good afternoon. This is Masaho Petolensu from Botswana. I'm from the CSD side. Maybe I have missed the ownership structure between your CSD and the central bank, because my understanding is that the central bank is for the government. And does that mean that even the CSD, now that all the operations are done at the central bank, is now owned by the central bank, and how has the public, especially the private sector, reacted to this process where everything is done in the central bank? Thank you.
Thank you for the question. So the two CSDs in Georgia, they are completely independent from a legal perspective, and also in a way from the operational perspective. So the private CSD, they continue doing their business. They are servicing the market in the areas of equities and the corporate bonds and some like supranationals that are issued in the local market. So from that perspective, they continue doing what they have been doing. Also, as I mentioned, they own the license for the system. They co-own the license. So basically, they are co-owners of the system. So from that perspective, they again have full ownership. From a operations perspective, while the system is installed at the central bank and its operations and maintenance are done by a central bank, so the commercial CSD, they have their own access. And that type access is not different from the access and the privileges they would have if they installed the system at their premises. Okay, so they can do pretty much everything they want and have to do, starting from registering the participants, new security issues, any administrative tasks. So they perform on their own, and there's no involvement from the central bank. So from that perspective, the two CSDs, they continue operating independently. But there are some efficiencies. For example, in order to use a security that's deposited with a commercial CSD with a central bank, the participants does not really have to move a security from the one CSD to the central bank, so they can pledge directly from there. And from a participant perspective, like a commercial bank perspective, so while they have accounts in two CSDs, so they have one token, they log into one system, and they see their entire portfolio on one screen. So from a user experience perspective, so there's actually one environment, there's one space they operate. Also legally, there are two depositories. Hope this answers.
Thank you very much. It was very interesting. And thank you, gentlemen.